All right. It is the first trading day of 2023. Happy New Year, everybody. Um, Hope you guys did well today, or at least learned something. If you didn't do well, that's all right too. So what we're gonna do is I'm gonna review the day. We'll watch the close, and then we're gonna review the day a little bit, and then I want to show you some new concepts I'm using already, and then also, like always, I'm always testing new ideas, right, that I might not be using yet to enter trades, but I'm taking data on to determine whether or not I want to add it to my process. It's a trading and like building a trading plan is needs to be a dynamic process, you guys, and it helps to have a team of traders who are all sort of doing the same thing. But some of us enjoy the process of actually finding new trades, seeing what's working, looking at back testing, doing Monte Carlos, stuff like that, trying to figure out like, hey, should we be shifting or should we be doing the same thing? And I'm just one of those people that digs that kind of stuff. So yeah, I don't want to nerd out on it too much, but it's kind of fun to show you guys what like is in the cooker, right? Even if it's not polished. And then if you're in the trading perform room, what you'll see is that as my trading coach Simon kind of amalgamates some of the ideas from different traders and says, someone might say, hey, this is really working for me, and then someone else will be like, no, it's this other thing is actually working better for me, and Simon will make the decision of whether or not he wants to share an idea with the group after we've like gathered enough info to kind of prove that it's useful and that it's applicable to the current environment. So there's always stuff going on in the background, but it's important to understand though that a lot of these ideas are not yet solidified into trade ideas, and that's one reason why my chart looks so busy. Is it's got a lot of stuff that I actually don't need to trade, but I'm running it as like a forward test basically, so that when I'm not trading, I can observe and review whether or not these in the works trade ideas are working in the current environment. So anyway, if you want to get a hold of me on Twitter, it's @RedBenTrader. If you want to see what we're doing in the room, I believe Simon said that he's going to take a couple more traders potentially. If you want to get a hold of my coach, his email is here, trade, letter N, wordperform @gmail.com. He'll most likely give you a 5-day pass, assuming that like you're interested in like doing what we do. And yeah, if you like it, you can join us. If not, that's cool too. So at least this will give you an idea of what we're kind of doing. So my charts, like I said, are pretty busy. Okay, we are looking at a Renko chart of the Nasdaq. Now on Simon's charts, they're significantly simpler but similar. So this is what Simon's chart would look like, with a lot less. It's still got a lot of rainbow colors, but it's less than mine, right? There's not as many zones and not as many indicators and stuff like that on his charts, whereas on mine, I've got a lot of extra things added, some of which I'm using to get into trades, other things I'm actually just testing out, right? Most of these zones here, the colored areas, come from the profile. So here. So the profile gives me, and they're all color coded. And I know the colors, but if you had a question about like why is this area like marked, I can tell you what they are. But I'm not going to go through and explain the whole process. But every day in like after the trading day, I go back and move these around and add them where I need to, and delete them when they stop mattering. And it then prints it on the Renko chart. The one on the left is a 24 tick Renko chart. This is where my trade entries trigger, because that way I can get long at the top of the bar and put my stop below the bottom of the bar and be consistently risking about 15 to 18 points, very rarely more than that. And that's just a risk level that I'm willing to take. The one on the right, this is a 15 tick, so it's much faster. Each of these, like the Renko chart will print another brick in the same direction after it's traveled another 15 points. Whereas here it needs to move 24 points in the same direction to print a new brick. So this will give me some early warning. I don't necessarily use it for trading. There are some exceptions to that. It's not wrong to use it for trading. It's just that you're going to have a bigger signal to noise, or sorry, it's a smaller, I guess, signal to noise ratio. In other words, you're going to get triggered into trades. The algo will trigger you into trades or like indicate that you should be getting long or short. And the likelihood that that win rate will be where it needs to be is lower, right? On the smaller the time frame. The good news is those stops would be small, right? Because this, for instance, here I'll show you with the actual levels. So this one, let's say that you were looking to be bullish and you wanted to get a what's called a trap back in, which you need one of these triangles. We need to get under it, and then we need to come back into it, into the range. Okay, that's like one of the trades. I've talked about it a lot. If you don't know what it is, it's okay, but just trust me right for now that this would be a potential long entry. The entry would confirm when this bar closed, which was 10,942.75. The stop would go underneath this, so 10,933.75, right? That would be a much smaller stop here on the 15 tick than it would here, which this one is not a trade setup yet. But if it was, I'd have to wait for a bar to close before it confirmed that it was a valid entry. I can't, if I'm trading the 24 tick, I can't just enter because I'm guessing that I think it's going to happen. I need to wait for this bar to close before I get a valid signal. So like here, you're going to see that star disappear. See that? Because when it closes, the information is potentially different than when it's live, because the conditions for a lot of these algos require a bar to be closed. So yeah, that's an important aspect, is you're going to see signals disappear and reappear on the live bars. Those are just warning signals. They're just signs that the condition has been met at the moment, but by the time the bar closes, they may no longer be relevant. But once the bar closes, those signals are going to no longer disappear. It doesn't actually, what is it called, like repaint? It's just giving us an early warning. See, like this triangle needed a close to the upside to print, and we got the warning that it might come there, but it needed to close bullish. Now we've got this star here, but it's a live bar, so it'll disappear if it goes bearish, but it'll most likely stick around if it closes bullish. So you can't just buy it, because if it closes bearish, it's not going to be there, right? So you got to wait until if you were looking for a star here, you'd have to wait for the bar to close bullish. And that's just an important aspect of watching the algo that a lot of people just get really like dizzy about, because they're like, wait, I thought I saw a star there and now it's an orange bar, like what, right? It's like, yeah, the orange, in this case, this is the valid signal. The star is meaningless because it was just warning us that if it closed bullish, it would produce a star at that moment, but it didn't close bullish, so it's not valid. But notice this will never change. It'll always be an orange bar with in the size of a little yellow arrow on it too. But so yeah, that's just an important aspect of how to read the Renko chart. But here, what I was saying before is this gave us the entry, right? The entry signal was the trap back in on the 15 tick, and that produced a scalp back up to the top of the channel, which is what we want. This shaded white area is our primary target, as well as this overnight low is also a really good target anyway. So that would have been a pretty good trade, because we would have gotten in, if you were willing to trade the smaller time frame, you would have gotten in at 43, let's say, and you put your stop, I think I said it's 33.75, right? So, and then you're getting how much? You're getting potentially like, let's say like 59 maybe. Hold on real quick. So yeah, you could potentially do like 59 points. So that's like better. It's almost 2 to 1, right? It's more than 2 to 1. So it's a pretty good risk reward ratio. Whereas on the 24 tick, it did not set up. But what you're going to find is on the 15 tick, if you trade it over and over and over again, the win rate on the 15 tick is going to be lower naturally, because the market can move these 15 ticks pretty easily, particularly when there's lots of volume. And so you could kind of get a fake out move that stops you out before the real move goes. So you're going to get this extra noise that you're not maybe used to if you usually trade the 24 tick. Now, I'm not suggesting that they work every time on the 24 tick. They don't, right? You still have stops, but the win rate's going to be vastly higher if you wait for the signal on the 24 tick rather than immediately trading the 15 tick. But there are, what I'm going to show you after we close is there are some cool ways to use the 15 tick and watch it, and it can help you like filter out some of the trade entries on the 24 tick and clue you in that you might want to be looking for a trade soon. Maybe not immediately, but soon. So I can show you right away. One example of that is when we got this. So here, let me fix this real quick. Oh, I guess that's correct. Have we closed? Oh, we're about to close. Okay, so here, I'm going to zoom in really close. So if we were looking for an opportunity to get long here, right, what we would do, one way to use this is, see this down wave here off the high, right? That was the high of this, like, this little consolidation, right? I realize it actually came all the way up here. So I guess that was technically the high, but it's this wave here, this rotation here, that's the high of that rotation, right? And this is the low of that rotation. So if we mark where the volume, the cumulative volume, the Weiss wave was here, and then we look to the right and we see when that crossed, it became, so what that's telling me, the fact that the green bar is bigger than the very biggest gray bar before it, is that there's more cumulative volume in these 3 bars than there were in this entire wave. Now, that's not necessarily a trade setup, okay? That's not necessarily a reason to get long, but it is a reason to start looking for long setups. So if I wasn't sure if I wanted to be looking long or looking short, once I saw that, what I can basically say is, look, as long as we don't go below this level and break down under it, it's okay to test below it. We can do this. That's fine. Still bullish, potentially. But what we can't do is this or that, right? Neither of those are good. So if we develop some volume underneath it, which I can show you exactly. There's a very systematic way to determine whether or not that's occurred or not. Then we would change our bias potentially. But in the meantime, unless we get a dominant wave to the upside on the 24 tick, we're going to use this, what we call an apex, this little swing low, as the determining factor for whether or not we want to be bullish or bearish. Now, this is the close, so realize that, like, that's not going to be you're going to have some anomalies here because of all the volume that comes in. Hold on real quick. Okay, so that is the close, and what you'll see is there's no setup, right? There's no buy. We were ready for it to trap back in here, but it appears it's not going to. Let's see if they can do it. They did not close above this high. It just immediately rejected. So there's really no opportunity for a big swing trade in the after hours here. Not to mention that it's going to be settlement in 15 minutes, but let's just imagine it wasn't the close, and I'll just demonstrate how this would work. But if we close down here now without coming back up and touching the level, if we just drop down, like just reject, then the opportunity for getting long based on this dominant wave here is over. And it just didn't set up. And that is the biggest complaint that people have about systematic trading like this. See, we're making decisions manually, to get into trades and based on what we see on the screen, right? We're not having the algo automatically get us into trades or out of trades. We are looking for the trigger visually, and then once we see it, we're pushing a button manually. So there's discretion. Okay, there's our close below with volume getting below. So that is the sign that we should stop being bullish. And instead, what you now have to do is you'd have to either go to a higher time frame and determine if this is an area that you want to be getting short, which is fine, right? If this is actually consolidation at a high or at a likely resistance, you might get an opportunity for a short. Or if you think, well, I still think it's long, but maybe not from here, then we'd have to follow some further rules for determining when we can look long again. But for the time being, we're no longer interested in getting long. Now, does that mean that price can't go back up from here? No. It just means that we don't have a systematic way to get long in these conditions. For good reason, usually, because usually it doesn't go higher. But what I think is confusing for a lot of people is they think, okay, well, if you don't have a systematic way to get long here, then isn't it bearish? And the answer to that is, well, it might be bearish, but I also need a systematic way to get short. So just because I think we're probably going lower doesn't mean that I should be active in the market. And that's, especially if you're new with day trading, that might be a relatively foreign idea of like watching the market and not being actively trading it. But the truth is that the very best traders have a very systematic way of determining whether or not they're going to get involved in the market at all. And the majority of the time, we're not in a trade. We are waiting for our setup to produce the opportunity where we actually have an edge, right? So that's a really important, just general concept that sometimes I forget a lot of people just don't even realize, is that especially if I'm, reviewing the day and I'm saying like, oh, this so-and-so like looks bullish or bearish, realize that that doesn't necessarily mean that I'm in the market. It just means I'm looking for my setup to trigger in that direction. So while I could say this is a sign that we look pretty bearish, without a systematic setup, I can't actually sell it, right? I can't short it, even though I might think it's going lower. So that's really important to understand. Okay, so anyway, let's review the day because that's the close. And like I said, we did not get the opportunity to get the long, and that's fine. So we're gonna back it up and look at the day. Oh, here, let me erase some of these extra things here. We don't need all the volume profiles. There we go. Okay, so we're gonna back up. I want to show you the overnight because it's actually kind of interesting, and you're gonna see hopefully how things the process and the algo, the process of determining whether or not I should even be trading, right, and then using the algo to determine where and when to trade. You will see, hopefully, how dynamic it is based on what's going on in the context of the market, right? What the price action looks like, where we are on the chart, right? So let's quickly, in case you guys don't trade indexes, let's just quick look at what we've been doing recently. And again, I trade NASDAQ, but you can also do this with ES. It still works. You just don't get as many trade opportunities generally with ES. It is a little bit easier to trade. Like it's not as jerky, and the DOM is definitely easier to read. The setups are usually a little smoother, but it's it won't set up as often, right? So I'm gonna get more setups with NQ than with ES, and I can just make more. Now, if you can handle watching both markets at the same time, cool. Trade them both. I'm a little bit older and I'm not a great multitasker. And if I'm not super focused, I tend to make mistakes. So because this is a discretionary system that we run, it's really important that you have the focus necessary to run the system. And I'm currently at this point unable to trade both of them at high level. I can trade both of them, but I sacrifice accuracy as a result. So anyway, we had a short week last week, right? And you can see that we had some resistance to work out here, but on Friday we closed with a spike, right? So the spike rules based on the profile, and this goes back to Dalton, is if you look at the base of the spike, which is here, about 10,940 or so, right? It's actually right about where we are now, 10,940. The idea is as long as that area holds on the next pullback, you can assume that the spike, the auction here, the price action, that buyers have confirmed interest in the area, and you'll probably go higher. But what's interesting is instead of coming back right away, oh shoot, what did I do? I hit the wrong button. Hold on. Instead of coming back right away, what they did, oops, that's not the right one. I need my voodoo range levels, so we need this one. Instead of coming back right away, what they did was they gapped way up above the previous week's high. See that? So this was overnight Monday, which was closed. Okay, so this big gap here and this move was all in Asia and London. Okay, so that's really important to understand, because when this gap happened, it was the same time period. It was Asia, right? So that area way up here we've not yet broken above here, but if you look at where we traded last week after this pullback, right, the regular trading hours open on Tuesday, December 27th was here, right there. See that? And we had rejected it Friday. And then when we closed, we were approaching it, but we hadn't tested it yet. We opened above that. Let me see if I can make this just a little bit bigger. We opened above it. Here, I'll put a line there, because I think this is, I don't even need to draw them. I just kind of see it. But if you don't see it, it's really important that you do. So here, let me just change this to like blue. Okay. So that is the regular trading hours high of last week. Oh, sorry, it's actually higher than that because it went up here. So that is our regular trading hours high, right? It does not include the after hours from Sunday night or Monday, I guess it was. Monday night. But then overnight, we gapped above the blue, came up and tested this likely resistance zone from the overnight session, rejected, right? And then went right through that regular trading hours high, which makes sense, just so you know. That's normal. That's what happens. You get big spike up, gap up. The natural reaction is actually to fill that gap and come down towards this afternoon low. It's not always this one. It can also be this one, right? It doesn't have to be like on the hour or whatever. It could be any of these pivots. But we'll come back and test probably under one and then reject. So what ends up happening is they pull back. You can use fibs if you want to. That sometimes helps. But you can see they got under this one, but they weren't able to close under it. See that right here? No close below it, and it just bounced, right? Ran into the voodoo range level overnight, broke through it, retested it after consolidating here. That is bullish, okay? Because the spike, the afternoon spike here, was defended. Okay, hopefully that makes sense. We traded into it, refilled the gap, traded into the spike, and found buyers. So the natural target now should be back up here for the regular trading hours. Because remember, we haven't gotten there in the regular trading hour session, okay? It's really important to understand. So that should be the target. Now we might hit it before we open, and that's fine, but there it is. So it takes it out before we open. We're going to see that in a minute. We're going to see this on the algo and what that looked like. Oh, here, let me make sure we can actually see the numbers. That kind of helps see the price. So, but the important part I want to show you overnight is this consolidation and how it changed once we broke out of that consolidation, and the market started to target the stops that were sitting up here from all the shorts who were trying to desperately sell this, and then stayed short and got squeezed. So once we took out the liquidity, what you'll see is that zone became resistance again. So it took out this high, tested above it, and then rejected, and then retested it and rejected, right? That was pre-market during London. You can see here, we came all the way back down. We started to, whoops, sorry, I didn't mean to show you the open. So before the pre-market, right, we had made this, here, if you do a fib retracement, and you start here at this base, and you go up to the top, what you're going to see is that they made basically 80% retrace, which is pretty natural for a new bullish trend. So the first thought should be, that looks pretty good, right? And then if you look back from here, it's actually almost a perfect 50% retracement, right? Also pretty natural for a bigger picture to get a 50% retrace. And then continue higher, meaning that my natural target now would be up here above this. That would be my assumption, is that we're actually going higher here after the spike got confirmed, right? So how we know when that changes, I'm going to show you on the algo, okay? But just so you know, even without the algo, you can tell from the candlestick chart, just with some simple fibs, that it's probably bullish, okay, at that point. So we get the open. We do, in the regular trading hours, clean this up. Remember, this whole purple area here required cleanup. We needed to come through here and clean it up. We almost finished it. See that? There's just a tiny little bit up there. It may or may not break it, but I'm going to leave it on the chart until it does completely fill it in during the regular trading hours. And then we'll see what happens from there. It might stay on there even longer, or it might contract on a smaller time frame. One way or another, the zone remains important, but it should make a lot of sense to test above this high and then get rejection. Now, they did close the first 30 minutes up there, but it was outside of the zone. See that? It tested inside the zone. It tested over the zone, sorry. Swept all the stops of everybody that shorted here, right? Swept above the visual high where everyone puts their stop up here. Takes those stops, cleans up this previously messy overnight holiday trading, which was signal prints earlier, right? So very important area to get cleaned up, and they pretty much did. And then they rejected. So what's going to happen now? Well, the normal expectation would be balance. You've already worked, you've taken care of the higher end. So now the natural conclusion to that is come back down and do the same thing on the opposite side. So where's the opposite side? Well, again, we had this afternoon spike. So the opposite side is this pink or light purple zone here is where I would expect to see buyers show up. And it would make sense also to go straight there, pretty much trend day down. They make a nice little retrace. They run into this fib. Wait, whoops, that already happened. So here, they just go right to the bottom of it, right? They test below it, close back into it. First sign, and look at volume, decreasing significantly, right? It's the first sign that there might be some value hunters down here, and that the shorts might be getting a little bit overcommitted. But we do want to watch for this low to get taken out, because that might be an opportunity for a very short-term buy, especially when we have this kind of action, this kind of price action where it's straight down with lower volume into a likely support. So we do get a bounce immediately. That bounce then rejects, which makes a ton of sense. And where does it go? Well, I believe it goes under the low. Yeah. So that, and then again, we get decreasing volume. We're underneath the low, right? Here's the low here. We've got a nice little doji candle. So guess what? If you want to buy a break and close above this, I'm not against that. You just have to put your low at the low, your stop at the low of the day. Otherwise, use the algo and get long that way, or wait for a tighter setup, right? So they do break above it and close above it back into this purple pivot zone. If you want to be really aggressive, you could buy that. I'm only buying it with the algo supporting me. You can see that it did one more test below, just to make sure everyone's out. Two more tests below, right? But you would have gotten a little piece. It's just for a scalp, right? So you got a little piece there. So there were some long opportunities here. But then here's where things change a little bit. Look at volume. It's increasing now, right? So we had the biggest volume candle down here is this low, right at the voodoo range level. We tested a little bit below it and then closed way back up here above all these other lows, right? So now, as long as this low holds and we don't close below it, especially if we don't close below one of these other lows like this, you can actually get a retrace. And that the target for that retrace, since we had this spike that was defended, and now they've come back and re-auctioned all the way through it down to the lows, our general target should be back into this lower zone. Because if you think about it, it's exactly the opposite of what happened here. Here, we tested into the zone and they defended, right? Sending us to the other zone. Had we done this and then started going higher or pulled back and held the zone, I would think we're headed back up here. But instead, we did take out this low. But we couldn't even close a 15-minute candle below it before getting a significant retrace. So I mentioned on Twitter when I saw here that what I really wanted to see for the best long, which I actually took today, was for us to return to this voodoo range level. And the reason I wanted to see that, this one right here, 10, 8, 78, 75. I wanted a long that tested that level because that voodoo range level was below this purple pivot, and we've now gotten some consolidation inside the purple pivot. So if this acts as support, it's a sign that this low has trapped sellers. Why? Because it had lots of volume. It's at a voodoo range level, right? So this is basically a higher low retest right there. Nice hammer candle. I don't know what else you want to see, you guys. If you're a candle trader, this should like get you aroused, right? Like that's exciting stuff. Now, if you're a candlestick trader, you wouldn't be able to get long until here. It's not wrong. It's just hard to have, hard to trade with leverage if you're getting long at 918 and your stop has to be down at 70, right? Like a 30-point stop is kind of a lot. Maybe not with options, but with the algo, I can get better entries for a nice pop up, right? And then now again, where's our target? It's back into this purple area. And what do you know? We reject right off the voodoo range level at 10,973.25, and then come back to the bottom of that same area that needed to be re-auctioned. So now what are we doing? We are consolidating or accumulating or preparing to distribute further, but by re-auctioning this area that needed to get cleaned up. So this is exactly what we should expect in these pink areas, is when they don't act as support immediately and you close below them and then retest, you need to trap shorts before you should even think about getting long again. Once you have trapped shorts, which happened once we got above this and closed above it, clearly they were trapped here. Any pullback could probably get long. Notice they do F you here. If you put your stop under this and got long here, they stopped you out and then run, right? So you got to be aware of those little tricks. Some people call it manipulation. It's just the way the market works. If you've got this much space between the low and your breakout entry, if you want to breakout trade, you really can't put your stop here, unfortunately. It would have to go down here, which is tough, but it's the way it goes. So, what was I saying? Yeah, now that we're consolidating in here, realize that that's very healthy in both cases, whether or not we're going to continue lower, that's healthy, or if we're going to continue higher, it would also be normal. So it should just be very expected to end the day inside of here. And because of that, because we know because we know to expect that, we really should only be selling up in this area, and we should only be buying down here. So if the algo, which is looking bar by bar, right? It's saying, do certain conditions exist at this very moment? If they do, the signal comes on. If they don't, the signal's not there, right? It's not necessarily looking at the bigger picture to tell you whether or not that information is relevant or not. So you need to be able to monitor things like the context and the candlesticks on like another screen, or at least occasionally refer to it, so that once you see something like this, if you knew to watch this area and you see them reject the top and bounce off the bottom, the only place you should be looking long is down here. We don't want to now long here in the middle. I hope that makes sense. But anyway, that's enough of that. So remember, we're going to start all the way back here overnight, and we're going to look at this gap. And I want to show you how the 10,940 area became so important, and how we can use the algo to actually get paid for that information. So here is the Tuesday open. It was a gap. What am I doing wrong here? It's up here. Monday open. Here we go. Monday open, right? Gap's up. Don't do anything. Just wait, right? We expect it to pull back. Like I said, 10,040 area is our like where we could even start thinking about expecting to watch for buyers to show up. So notice the move up has much less volume, of course, than the close, and that's just because of the time period, but it does influence the move. It generally means that this will not hold because there was such heavy volume down here. It's natural for that spike to get re-auctioned, which we just talked about. So realize that you really shouldn't be buying any of these, even if it is a setup. We can erase some of these lines. We don't need these anymore. Okay, so this one. All right, so the green, these are single prints earlier. They were single prints on the profile. So that's why they're trying to save this, is they're testing down into some single prints and they're trying to bounce. But the context is too bearish at this tiny little time frame to consider getting long here. We really want to wait until we get at least to 10,940, not 11. It's quite a bit lower, 10,940. So we don't really want to be thinking long at all here. If you were wondering when you could get long, the first thing you need to do is you could look at the 15 tick and you could count 3 waves down from kind of like a Wyckoff point of view. And you could at least wait for that and then see if maybe you can get some divergence or some other sign that sellers are getting exhausted. If that doesn't happen, you really do need to wait for location or for a sign that sellers have been trapped. But the last thing you want to do is aggressively buy just because you have the single prints on your chart. That's not enough, no matter what the algo says, to buy here. So even if purple bar followed by a pink diamond is a signal that often produces a lift, it's not worth trying here because of the context. That's the important thing to understand here. So we trade lower and lower and lower. Same thing here. Purple bar, green bar, purple bar, green bar with a pink diamond, right? Like all of these little combos are great for when the context is bullish, but it's not going to work when the context is bearish. And you don't even have to go into anything more than that. That's just knowing that is enough. Why is that? Oh, so this blue line was a naked volume point of control. We gapped over it and then tested back into it. That's why they're trying to bounce off of here. Again, context should tell you do not blindly enter any levels. Also, all these dashed lines are the voodoo range levels, and note they are not to be bought. It's futile to buy them blindly, right? Instead, once we know it's bearish, if we see stars forming on a bar that tests the voodoo range level, we can actually short that. But you need to know the context is bearish on this tiny little time frame. So, okay, so anyway, we go lower. I don't remember why I put that there. We're going to get rid of all of these extra little markings that I had added while I was trading overnight. Okay. So see, we wouldn't want to short this because the voodoo range level here is down here, right? And look how far we are, how far we've moved, right? And then if you look at the 15 tick, if you counted, this was 1 wave down. The gray is down waves. This is 2 waves down, right? And notice this one went lower, but the volume was divergent. And then this one is 3 waves down, right? So now, once again, volume was divergent. So I don't want to be aggressively shorting here. And if you really were anxious to get long, what you'd need, the very first sign that we might be getting some buyers showing up, is getting more cumulative volume on an up wave than you got in this down wave. So we would not be even thinking about a long until here. So this would be our very first opportunity to even start looking for a long. So what should we do? Well, at 10.965, we can look at the 24 tick and see that we got purple bar followed by diamond. That is a good trade entry as long as you have reason to think there are buyers here. And if you're bearish, you need location as well, or I do anyway. Well, where are we? We're at 10.954. Remember, I said I really wanted to be at 10.940. And I'd like to see if we can hold that level after a test. So it's not perfect, but it's pretty close, right? And we do have this aggressive signal of the buyers showing up on the smaller time frame. And then we also have some pretty significant bullish divergence on the MACD histogram, which I represent as a line, but it's still the histogram. And we've gotten into the oversold zone of the volume zone oscillator. Okay, so all of those things are just evidence that we might be due for a bounce. It does not mean that this has to be the low, but it means the chances to get 10 points here before losing 15 to 18 points is actually pretty good. So here it does work out. Okay, we come back in and squeeze. Note we do not come right back here and test that out. We don't sweep underneath it. We just race higher, and sometimes that's just how it goes. Right? If you didn't take the aggressive trade off the low, you'd miss the opportunity to catch this big rip into London Open. Okay, so now the next question everybody always has is, okay, but should I be looking right now? Should I be looking for buyers for longs or for shorts? Like, they understand that they could be aggressive and go for that move off the low. If that's your style, go ahead and do it as long as you've got all the pieces there, right? But if that's not your style and you're like, well, then how? If I'm not willing to do that, and instead I want some kind of a pullback, well, where can I get long? Well, the first place to get long is actually here. So I see this green line here. That developed based on the volume zone oscillator, and it also it basically identifies that if we can break above this and then it holds as support and we get a sign of aggression, that is a valid entry right here. Oops. As long as there's more buyers than sellers on the smaller time frame, which there are. See how the buy waves are dominant to the little sell waves, right? Now this one's only a 2-bar sell wave, but it's still good enough. This one was also dominant to this sell wave. So see how we're getting more buyers than sellers in general? It's a sign that you can start being a little bit more aggressive, or that I can start being a little more aggressive. Now, notice it's green here, which means it was single prints. So we tested underneath the single prints. That's why they bounced here. So that's not a reason to buy. Don't just buy because you're at single prints and you see a sign of aggression. That's normal, right? Then they get big aggressive sellers in, and then they run out of steam, get the signal to get long with our aggressive use of the 15 tick. It takes off. If you didn't take that aggressive trade, we identified this level as important from the volume zone oscillator getting oversold. Once it becomes support and the algo signals aggression, we can get long there. Our stop in this case goes underneath this, and since there's a voodoo range right there, I would probably put it at 10.973, and my entry is 10.990.75, right? So I mean it's about right. It's less than 20 points. That's what I need, right? So I at least want to get 10 to 12 points here, and I'd be, because so once you've got this little high, this apex here, that little triangle on my charts, once you've printed that, if you can get above it and close a bullish bar, it's then what we call supernova. So this bar, if you look closely, closed above it. See that? So that's a sign that you might want to hold this trade, this buy, a little bit longer than you normally would, because of that close above the apex here. It's a sign that these trapped shorts might be in for some pain, right? And so they do squeeze it, and that's great. Okay. Now, like I said, the question everyone has is, okay, great, I get that. Even if you understand that you've got an aggressive opportunity, you've got a more conservative or a slightly aggressive opportunity, but then they wonder, okay, well, now that I've moved so far, am I still bullish, or should I be looking for a sell opportunity here, considering that we dropped all this way overnight, and maybe one of these levels will become resistance? Well, the answer to that is you look at the higher time frame, right? And on the higher time frame, like we showed before, we had that spike here, right? And where we are in the picture is right here. So rather than being bearish, just because people will see this and they'll think, oh, it's a lower high. It's like, yeah, if you zoom in to this, it might look like a lower high, but it's definitely also a higher low, right? Higher low. And so, if anything, higher low plus lower high means consolidation. And rather than thinking about this like an immediate bearish trend, what I want you to start seeing is that we've gotten the move down followed by a retrace, a move down followed by a retrace, and a move down, right? We've gotten our Wyckoff move already. That little S curve has already happened. So if we do get a pullback, what we should be looking for is actually a spring, or to spring a trap, right? We want to see them test below this and then bounce. That'd be great. What we don't want to do is aggressively short here, in my opinion. So that's how you figure that out. Do I want to be looking short? Well, look at the bigger picture, right? If you did want to be going short, then you would have to have location. Well, where would be a normal location? Well, we had these single prints, so you're going to get a reaction there regardless, most likely, when we return to it, so be careful there. But if we can reject under the single prints after testing them, that might be a sensible place to look for a short. Other than that, I don't really see anything, right? So notice we bounce, we consolidate here. Could you technically buy this? Yes, that's also a trap back in, and it's totally valid if you want. It tested just a few ticks below there. See that? At 1 o'clock in the morning and bounced. That's great. Right? And it comes all the way back up here. Now, I was last night talking about a scalp for a short, and you can do that, but you need to wait until you retrace this whole move and you get a sign of either traders getting trapped at the highs or exhaustion. So where is our bullish target? It's back up here, okay, in this green area. All right, the bright green corresponds with the purple. Okay, so here's our first test of that area. Here, let me just turn off this opaqueness. There we go, so you can see it. So this green area gets tested. You don't just want to be an automatic seller, okay? Don't just sell because it's at location. You do have you're testing into the overbought area of the volume zone oscillator, but if you look on the higher time frame, this was not. There was no aggressive sell here, and your aggressive seller is confirmed there. And by that point, you're already past the 2-bar combo, pink bar star. It's already happened. So now that you've gotten the aggressive move right here at 11,134, right? I don't want to get short there necessarily, but if I can get a setup in this area to get short, I could take a scalp to the short side. So let's see how that would work, right? And come up here. Okay, they trap back into this range. That's my first opportunity for a short. The next opportunity would be another purple bar in the range. There we go. So the second purple bar in the range of this first purple bar is generally a pretty good one. I prefer that it's a lower high. But it does work, more or less. Not always, though. See, that one rejects. So the shorts are hard. It rejects up. Does it trap? This one's opaque, too, and I can't see what it says. Okay. As is, I don't think I need that. Yeah, okay. So, oh, and this one's also opaque. I thought I changed these, but I guess I didn't. Oh, it's not. Why does it look opaque? That's weird. Okay, anyway. Yeah, so this was a trap back in. But you can see buyers are now taking over, and we've had a close above this aggressive wave down. So you don't want to take that. Don't bother with it. Unless you've broken down underneath the apex, and then you got supernova. And in that case, you can be a little more aggressive. We don't have supernova. To get supernova, we need to get underneath one of these. Okay. I don't need this gray here yet. I wouldn't know about that yet. Oh, I guess that's the single print, so I guess I do know about that. No, I don't think it is. Why is that not colored correctly? Okay, we'll get rid of it for now. Oh, okay, that was that. That's right. Can I undo? Ah, that's okay. I don't need any more because it's actually gotten filled. We're gonna get rid of that one too. Okay, so no reason to be bearish here yet. Right, we have not rejected out of this area with an aggressive. We need to beat some of these buyers or trap them. Right, which has not happened. Okay. So did we beat this one? No. Don't be bearish yet. Okay. We had a little 2-bar pivot here, and then another one. And now we've gotten above that, but it's not 3 waves long, so it's really aggressive to take this short. And plus, we're not at the right location. Man, I don't know why that's not working. Oh, could it be that there's 2 of them? Oh, that's okay. I think there might be 2 of them there. That's probably what it is. 11, 1, 62, 25. Of course, it's the wrong one that I delete. That should fix it. There we go. Okay, so that level, it's just not a trade entry on the triangle. And really, it's not a great entry on just the orange bar either. There's just nothing to do here yet. We would need to retrace this purple and then get a new purple bar, or because all the volume's at the high, see that? All the volume on this little move is a high. As at the high, so if we break down and then come back up and reject out of it with a star, that is an entry to the short side. So you can see that we just totally drop, right, which happens sometimes. But on the smaller time frame, we did get the star in the right location, touching the 45-minute V-box. So that would have been an okay trade setup. And notice we did get the aggressive. So right here, we had more sellers than buyers. And then there you got the retrace and the star. Right, so that was the only way to get short here because of the fact that we had all the volume at the highs. It's really aggressive though, right? Most of the time I'm not going to catch that, just to be totally honest. Okay, they bounce back up. Now this one is better, right? This bounce can be shorted. It's coming right back up to this level. It's the exact same thing as the green one back here. This. Remember how we got over the green? We came back to the green. And then we rejected it with a green, right? We're going to do the exact same thing up here with the red bars. See, this one did not get broken. And these are found by when the volume zone oscillator gets... Oh, actually, this one's not even right because it didn't break it. It just tested it. So, get rid of that. But here we get above it. Oh. Am I wrong? Does it not get above it? Huh. It needs to get above the yellow line. Maybe I didn't do that right. Maybe I was looking at the red one and thinking it was yellow. So in that case, it might be wrong. But let me see here. But the concept is still there. Maybe it does still work on the red one sometimes. But we come back up, we test it, and we reject it with the sign of aggression, the red outline. And then here we get another confirmation. That's a great combo. The black with the yellow, as long as it's bearish, is really good. So, and then here we also got a sign of bears taking control. See that? Aggressive sellers coming in. So that was your scalp to the downside. Where are we targeting? Right? The target should be back. We can look back at this low and we can say, first of all, was there anything, did they get any excess down here? And the answer is yes. they probably did get some excess down here. So my first thought is we're probably not going to go straight to this low. And then you ask, well, was there another pullback since then? And the only one was here, okay, which is the bottom of this green. So that one might get tested. They might want to test to see if there's any stops down there, right? And then we'll have to see what happens from there. Unfortunately, it's at the bottom of the single prints, so we'll probably get a reaction there anyway. Here's another one. This 11.036.25, that area, or even this one, the 11, whatever this blue one is, 11.040.25, that could also be a place where we get a reaction. Here's another one, right? I had marked them off because I was trading overnight, but those are the kind of areas that we might expect to target for our short. So you can see here we go to, yeah, we just haven't gotten to any of these yet. You can take a look here. So this one got a little bounce. You could long that if you want, but if you count, how many have we had since the top? 1, 2 waves, right? And the second one was even bigger than the first one, which is usually a concern. So I definitely want one more wave to come in. So there's my third wave, okay, right here. Third wave down happens here, okay? Only now am I really looking for longs. And I kind of wanted at location, and I need to set up, right? So I needed to set up. So what would that mean? Well, for instance, I could get over this with an aggressive buyer and then get a trap back in. Here, we do get a trap back in. See how it went underneath it, but then immediately closed back up above it? Make sure these are fixed. So I'm looking at this bar here with the pink diamond. That range becomes an area to look for aggressive bounces after testing below it, because it's got one of these triangles on it. So this is called a trap back in, okay? And all we need to do is just press a little higher than this, and we can get a pretty good retrace. So it would be pretty aggressive to take this one, but you technically could do it because we've had 3 down waves. What I'd prefer is if I also got this green bar above this gray bar, but it didn't quite happen. So, and that's, sometimes it's just not gonna, oh wait, maybe it did. I didn't have it in the right place, right here. Oh, it was late. It was 1 bar late. So the only way I could get that is if I saw it happen here, right here. If I saw that, and then I got this pullback, I can buy this bar right here. So that's the time when I'm going to sneak down into the 15 tick and see if I can catch a pullback, right? So I would be able to get it there. It's a little bit advanced. That's the only time it's already, in other words, the important part here is it's already triggered for me on the 24 tick. I just didn't get my entry because I was waiting for confirmation. So once I get that confirmation on the 15 tick, I don't just want to jump right into the trade, but if I get some kind of indication that we've gotten some sort of a pullback and they're rejecting going lower like this, especially off of these volume levels and off of the channels, and I've got a sign of aggression here, yeah, I'll go ahead and take that on a higher low for sure, right? So even though this alone, if I was only looking at the 24 tick, it looks like a chase, because I see this set up, it's okay, right? Because I can put my stop under this. Now, technically, your stop should actually go down here. But, yeah, technically it should go down there. So it is a pretty, so you probably have to take that with smaller size, to be completely honest. That's the right way to do it. I sometimes just put it here, but it's technically not right because it's the wrong time frame. You're supposed to be risking off of the apexes of the 24 tick, according to my coach. Here it wouldn't have mattered. It still held, and you got a nice little lift. Where did it go back to? Right back to the single prints. They got a reaction here. Should we sell this? No. Right? We should expect them to react to the single prints, but it might not continue. Look at the buy wave. It's way bigger than the sell wave, even on the 24 tick. What does that mean? It means that this will probably get broken, and this will probably hold. Or if we do test below it, they'll probably reject and go higher, and we can buy it again. Right? So I can put... this line here is from earlier. It was an area to look for longs based on the higher time frame. So I can now move that down here. And that's basically where I want to look for longs now. Unless I get set up up here. So once I've gotten this, again, now I'm going to be aggressive because look, I've got an apex to the upside that got closed above. So it's supernova, which basically means be more aggressive at it with your trade management, right? Because chances are, if I can get a pullback and an entry here, an entry signal on a pullback, it'll probably go 30 to 50 points. Now, unfortunately, all we got was another star on this time frame. But on the 15 tick, we did get a nice trap. See how it trapped back into that range of this star with the triangle on it? Traded below it, came back in it with 1 bar, closing inside of the range. You could technically buy that, and your stop would have to go under this. All right, so you're getting in at 88, and your stop is 78. It's 10 points. And that's okay. As long as you had supernova and you've had an aggressive buy wave, I'm cool with that. So you can get long there. Otherwise, if you stop that out, if I can come down here, test underneath this, and then immediately trap back in again, I can buy that too. So let's see what happens. There it is. Test it underneath it, right? I'm not interested in shorting this, by the way, unless we had all the volume at the top. This is pre-market. All the volume was not at the top. I'm not interested in shorting this. It does not trap back in. No opportunity for a long, and just no opportunity for a short. No big deal, right? Now remember, this is an area where we should be looking for longs in general if it can set up. But there's one problem. Oh, does it not get there? Is this a head and shoulders? No, there's no pivot over here, unfortunately. We couldn't get under this one, right? I don't think so. Nah, didn't make it. So this would be this is called a 2-bar combo, right? We talked about this earlier for the long down here, the purple bar followed by the really aggressive one. Purple bar followed by the pink diamond, or purple bar followed by a star like this. It's a 2-bar combo. It's fine. It's just really aggressive. You need to be right about direction for that to work. So, because see, if you try to take that same trade, purple bar, green bar, purple bar, diamond, purple bar, star, in a downtrend, you're going to get smashed. But look, all of a sudden it starts to work because we got the aggressive wave here, right? So, same exact concept here, only later. Right here. So, do we have an aggressive buy wave? That's the question. That's the number one question. And the answer is yes from way back here, right? This one here was an aggressive buy wave. Yes? We have not traded and developed volume underneath that, have we? No. Did we get supernova? Yes. We broke above and closed above a apex to the upside, right? So, in other words, if I can get a long setup here, chances are I can hold it for a bigger push. It's not just a 10-point move. It's potentially a 30 to 50-point move, right? But I need the setup. So what are the setups? Well, I can trade under this white line, or I can be more aggressive and take 2-bar combo. Purple bar, green bar, or for me, I can take purple bar, diamond too. On the trade and perform algo, the diamond is not there. That's my own addition. But just think about all of those signals as signs of aggression. It's based on the footprint. I'm not going to tell you how to build it because it's not my system, right? But it's based on the footprint and the DOM, and it's just looking for signs of aggression. So, yeah, that works, right? Get a nice little pre-market bounce there. And my target usually is 30 points. So in this case, the entry is, let's say, 74.50. So I need 14.50 right there. 30 points. Boom. Got it. Out. Right? So super good with that. Okay, so then we have another 2-bar combo to the downside here. And if you saw this as a lower high and you want to take it back and you've got enough range that you can probably get 10 points here. Yeah, but that's aggressive. I probably shouldn't even be talking about that because that's a super aggressive way to think about it. You just wait for it's bullish, right? You have to see that now it's bullish. We have not gotten an aggressive sell wave on the 15 tick. So forget I said that. Don't be aggressive when it's bullish, right? Don't be aggressively shorting when it's bullish. Just wait. You don't need extra. You don't need every 10 points, right? Technically it's valid, but yeah. You're just taking advantage of the single prints there. So we trade back and forth with the single prints. Most likely they are no longer a good trade entry once you see this kind of action, unless we reject off of it and bounce. That's the kind of thing you would want to buy. Other than that, if it breaks down again, I wouldn't even use it. So this is what you want right there. That is the kind of, as long as you've got, again, I realize I sound like a broken record. You need aggressive buyers on the smaller time frame at least. It helps if you also have aggressive buyers on the higher time frame, which we had beginning, once this sell wave, the cumulative volume, right? We got more buyers cumulatively on one wave than we did in this entire wave. And where did that happen? Happened back here. Should we be getting long? Only if you have a setup, right? Here we have a very, very, very aggressive setup. The problem with this is the location relative to our support, right? Because you would have to put your stop all the way down here and get long all the way up here. It kind of sucks, right? But it's probably going higher. You did have one opportunity back here to get long a little bit earlier at a 1:11:10, but that's still, you'd have to put your stop at 11:086. It's just a little too much for me, right? I'm not going to take that risk. Now, if they pull back and test underneath this and bounce, I can take it because then I'll probably get a 15-point stop at worst, right? In this case, it does work. Sometimes the aggressive trades work, right? And you just have to accept, you have to make a decision of how confident you think that it's, how confident are you that it's bullish, right? And do I have any reason to think that it's going to immediately reject? In other words, what happened to the left here? And what you'll see is when that trade set up, which was here, right? We were plenty far away from the resistance, which is this low volume node. See that? The resistance developed in this low volume node, which is found on the footprint, and I mark them in the morning. So I knew to be looking for sells there. That's my target, right? Okay, so, and preferably I want to get above this high and then sell. That's ideal. Because there's stops up there, right? So that's my target. So as long as you have room to the target, you can technically do it. You just have to do it with a really small size if you want to put your stop down here. Could you technically long this and put your stop here? You can, but you're going to get swept sometimes. You're going to get swept out, and it's going to be frustrating because then it's going to go without you, right? So just be aware of that. Okay, so because it's just a little bit too high on the channel. Anyway, come up here. See here, it would take you out there, right? You'd get 10 points, and then it would come back and it'd test below. Let's see if it holds the low. I don't remember. Okay, it takes you out anyway, even if you put it down here. Now, did we get to our apex? Right there. We did. So that's a trap back in. Remember, we've gotten supernova. We've got apexes to the upside. On my chart, it's these sideways triangles. I call them flags, so they are not confused with these triangles. Right? On Simon's charts, the apex look like little blue triangles. These guys. And then on the other side, it's, on the other side, it's these guys. Right? Mine are just a little different. But it's the same exact signal. Right? We've closed above that after putting in a significant low. That's basically the rule for supernova. Once you're in supernova, now these traps can produce big stretches, right? We saw that once already. Let's see if it happens again. Doesn't always work. Sometimes it does, right? So that's pretty good. Like, let's see, is that 30 points? Getting in at 89.50, getting out at 42. Yeah, cool. So now if you wanted to wait until some sort of sign of aggression to sell, that's fine. And that would be your sign of aggression. And why is it a sign of aggression? Because you tested above this high and rejected it with volume shifting lower, which on my charts is orange. On Simon's charts, if you're in the room, they look like little squares. I forget what color they are. I think they're white on the way up. No, white on the way down and blue on the way up, something like that. I forget what the colors are on Simon's charts. I usually watch my algo, so but it's the volume shift is what you're looking for there. So if you want to short this, it's aggressive, right? Because look, all of the buyers have all the momentum here. So what I would need is a lower high and a big sell wave. So I'm personally not selling. I'm not shorting this, but if I was long, I would take profits. So it's an important distinction. And I'd be bearish, right? I mean, but I wouldn't have the setup to confidently short it. Hold on, real quick. Make sure my buddies in the room are all right. What's going on here? Why is that closed? Hold on, real quick, guys. Okay, all good. So, okay. Now this is a sign of aggression to the upside. Okay, so if on the other hand, if you weren't thinking bearish and you wanted to push higher, you could technically buy this, right? It's still supernova, right? The significant low is here. We put in a high, apex, the flag. We closed above it, right? So we can be aggressive, and that hasn't changed, right? We have not closed below an apex of the low without immediately rejecting. So we did close below this, but we immediately rejected lower and bounced. We trapped back in. So if anything, shorts are trapped down here, right? And now, as long as we don't have sellers, so that where it gets confusing here is that sellers on this wave down technically had more aggression on this time frame than this one. See that? And what that generally means is that this high here is probably going to hold. And so that would be a reason to short this, if that's the way you look at that. But if you have to think about things in context, right? And in context, the shorts are actually trapped down here. And all of the liquidity is up here. So bigger picture, it's probably more of a long, right? And if you think about you can look on the smaller time frame, and you can see that since we had this big dominant wave down, we've also, since then, what you'll see is I believe have we not dominated? Oh, we didn't. So this is actually not an entry. I'm wrong. We did not have a dominant buy wave. I thought it was, but this one only had 2 bars. So this one had 2 bars, not 3. So it'd be aggressive to stay bullish here. If we would have gotten this wave bigger than this wave, I'd go ahead and buy that aggressive signal. But in this case, I wouldn't, and I believe it stops. It does stop. Okay, so that's interesting. So in this case, it was bearish. That was my intuition. But, did they just sweep you? They just swept you out and then just goes. Okay, I have no setup there on that time frame. That's fine. No dominant bull wave. So there's really nothing for me to do here. I'm definitely not shorting, right? I just don't get to participate in this last leg, and that's fine with me. So we test above that area, we reject. That should make sense based on this. That should make sense that we came back up here to this area and tested above it, and we're rejecting. We're testing above it, and we're rejecting, right? That should make sense. We're just collecting liquidity. So now remember, and then the other thing to think about back here, you guys, this was the open, right? I didn't point this out. This was the regular trading hours open. So what we do in the room, we just don't trade the first 30 minutes because it's volatile and you're going to get a lot of stops where normally you wouldn't. And so if you wanted to skip this trap, that's okay, right? Because it is the open. It's exactly at the open, basically. So I would not normally trade that unless you had some other read or location and stuff like that. There's very rare situations where I'm getting long right at the open, but I'd at least wait 15 minutes before doing anything, usually half an hour, because we have econ that's going to get released at 9 a.m. Central. So the truth of the matter is, I'm not even thinking about trading this in either direction until 9 o'clock rolls around, right? But if you wanted to think about it, if you are okay with the extra stops, what you would need to see to think it's bullish again is an aggressive wave up that then holds that low. So like this, right? And then we'd want to start closing bars above this, like that, right? So that'd be the sign that's like, oh, maybe we're going to continue higher. Let's see if we can get a trap, right? So, but what ends up happening is we get a big wave off the high. See that? So that's and it's off the high of like the last week, right? So that's suggestive that the sellers are actually participating here, and we probably don't want to be taking longs. So for instance, this trap back in, I would skip. And if we come back here and trap back in here, I would skip that one too. I'd at least wait 3 waves down on the smaller time frame. So that's 1, right? And they only count if they have 3 bars. That's 2, and that's 3. So this is the very first spot that I would even think about getting long. And I would need the setup to be on the 24 tick. So let's see how that process goes, and then we'll wait for the dominant wave. So we get a dominant wave to the bull side right here. Okay, there's nothing to do on the 24 tick. On the 15 tick, we get an aggressive entry signal, the star with the divergence. On my chart, it's a blue dot. On Simon's chart, I believe it's a white dot on the upside and then a yellow dot on the downside. So that is a decent entry. Otherwise, now it's not always going to work, but in this case, it does give you a nice little scalp, right? Okay, and then now look, we get an aggressive wave down. See that? Before it sets up again, we get aggressive wave down. So should we be looking for longs? No, not really, right? That's not what we want to see, right? If this is gonna bounce, especially at the single prints, we can't have a lot of sellers here. Okay, so we get through. Remember, this level was marked back here, right? So we'll take that out because that was already used at the open. Okay, we trade under the open. That's not usually a good sign. In general, that's bearish. And look how bearish it is, right? Into the econ numbers. Okay, we get a little bit oversold potentially, but I'm not buying this. It would be super, super aggressive to buy that because it's 10 minutes into econ and we haven't had any sign of aggression to the upside. So there's just nothing to do here unless you want to be short into the econ, in which case your short is the orange bar or the star. But good luck. Like I don't want to be short into econ usually. So I'm waiting for 9 o'clock to roll around and we can just watch and see what happens here. You can see we got a bullish 15 tick wave right here, right? And so now we're looking for longs, but we're 4 minutes into econ, so we're gonna wait, right? No long there, did not trap back in 1 bar. Okay, there is the econ. Okay, I believe it was 9 o'clock on the central time. So now we want to let them absorb that information and then reanalyze. Okay, so don't just jump right back into it. Wait for them to do something with it, right? So we're waiting for the econ, and they're absorbing it. See how they're kind of like consolidating in the single print area? I expect the low of the single prints to react, but that's not necessarily a buy signal. It's just algos interacting, not my algo, but like not our algo, but algos like high frequency trading algos trying to bait retail traders to buy, basically is what they're doing. So this dot with the star, when it's aggressive, see how we've got sellers aggressively coming in? That's actually a short. There's also a short here, This one. This is short 2. So if you want to be trading, you'd have to be going short because that's where all the aggression is. Okay, but I would recommend just waiting because we just had the econ, and why mess with it, right? So note we came underneath the single prints. This reaction is not a reaction I'm interested in personally. It happened 10 minutes after econ. It's close, but look, there's no aggressive buyers, right? It's just big sell wave into the low, right? That's right here. It's all sellers, so I'm not really interested in that. You can see it just rolls over. Okay, so wait, right? Don't do anything, or just stay short. If you want to be aggressive, you could have taken the short. And now we can, if you want, you can start counting waves, right? So where's the biggest wave? It's this one, right? So you could call this your 1 wave, and then we have 2. Okay, I need 1 more wave to the downside, 3 bar wave, before I even think about getting long. There it is, 3rd bar wave to the downside. Okay, so this now needs to get beat by aggressive buyers, or we need to go lower first before I buy. But I'm not interested in buying here unless we can show some signs of aggression. Okay, I'm okay with missing a move. Make that very clear. We make another down wave. Now I just need to get aggressive buyers above this before I start looking for a trade. Okay, nothing. We didn't do it. See, we couldn't quite do it. So I'm not going to buy yet. Oh, there we go. Now we put in another low. This one had divergence. We got up here and got over this. This line is too thick. It's supposed to snap, but maybe it only does it on the chart. I'd like to say that that's bigger, but maybe it's not. Right here, it clearly is. Okay, this is a buy signal if it is aggressive. If it is bigger, but it might not have been just by 1 bar. So here, I believe we took this trade together on the trap back in. So this trap back into this. If not, it was the next one. If this one fails, it was the next one. I don't remember. Yeah, it was that one. So that was our first long. It was here, right after that aggressive move there. Now, look what happened on the higher time frame. On the higher time frame, we've gotten an up apex, the flag. We've closed a bullish bar above that up apex, which means supernova, like higher gear, right? Be more aggressive. Don't go on tilt, but be more aggressive. If you get an opportunity to get a trap back in on any of these apexes, you want to take it and hold. Don't take profit so early. Try to push the trade a bit, right? Be more aggressive with your trade management, and then consider being more aggressive with your trade entries too if you have location, as long as you continue to see aggressive buyers showing up, right? So notice here, purple bar, green bar at the bottom of the channel. That's a 2-bar combo. You can trade it if you want. Just realize that your win rate's not going to be as good on the 15 tick, but you're probably going to get 10 points more often than not with that. Okay. Okay, so we're looking for a trap back in right there. That's your entry. See, we got under this and came right back into it. This had the apex, and we were supernova. We were above on apex to the upside after a significant low. And this is definitely a significant low. If you look at the bigger picture, this low was significant, right? We traded into the point of control of yesterday, which is the blue. And that was multiple waves down, including some really aggressive ones, right? And then we made an apex to the upside and closed above that apex to the upside. Closed above the apex to the upside here. It's bullish. Do not short, right? Closing above apexes to the upside. And that means we can aggressively take this trade here, right? So that's a long I took. And that one was pretty. Note here, all the aggressions to the upside, we are not bearish. That's the most important thing to take away from this, is my process is keeping me from taking trades in the wrong direction. And it's saving me a ton of money. I mean, I had a good day, by the way. Like, here, let me show you. How can I do this without showing my account information? Yeah, 1885. That's pretty good. So, okay. All right. So now, after this big wave up, so this is all the aggressions to the upside, right? Up, 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 up. Up, 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 up. Right? We broke above this. So there's really no reason to think that we're going to be going short unless we have I want to be aggressive, and the aggressive trade entry is the trap back is the DVP entry. So in this case, we've got all the volume at the high, which means if we get under that with volume and then come back up and test it, we could technically sell it if we've gotten a big down wave. So let's see if we get that. Well, we get the big down wave right there on the smaller time frame. So now if we can get that retrace and a rejection, it's a short. Okay, we didn't get the retrace. So that one just doesn't set up. And that's okay. It just dropped, right? No big deal. That happens. Okay, so but look, bearish for sure, right? Do not buy traps now. What do? We count 3 bars. Three waves. One wave from the top. This is clearly the impulse wave, right? So that's 1. Here's 2. We're not buying this, right? There's 3 waves, and this one's divergent, meaning it's got less volume, even though it's not divergent. It made a higher low. So now if we can get a aggressive buyer to put more volume than this into just a few bars, we can start looking for longs. That happens right there. Are we going to buy this? No. We're going to look for buys now, right? So I don't get to long this. I skip this. I filter that trade out. But now I'm starting to look for longs. Now look what else happened. We got an apex that got closed above. It's supernova, meaning if I can get a trade entry, I can be aggressive with trade management. So let's see. Do we get a bullish trade entry? Right there. We get underneath an apex, trap right back in with 1 bar, even got the star on it, and it's also a 2-bar combo. It's right at yesterday's BPOC, but we're approaching it from a gap up, so I'm okay with it. Okay, so that one is good. Note here, I was a little bit confused because I saw this big sell wave coming in, and I was like, oh no, sellers are in charge. But the way this works is as long as we have not developed volume below the apex, where we had all the bullish volume, this one, right? As long as this continues to hold, we're good. It can test below it. It just has to reject going lower, right? So that should be a supernova. It should give us 30 points most of the time. This one just doesn't work, and that's okay. I took it, and it stopped, and it's fine. You're going to get stops. It's all right, right? No big deal. We consolidate. We reject. Okay. Now, if I wanted to, I could restart my wave count with this being the impulse wave. 1, 2, and if I do it that way, it's nice and conservative. I'd have to wait for 1 more wave. This one only had 2 bars, right? So you can't, if you measure volume off this, you're being really aggressive. So you could say right here that you've got an opportunity for a trade if it traps back in, but I'd prefer to see 1 more down wave. And we get it right there. Okay. So now we have clearly gotten 3 down waves, right? And we've not really gotten the dominant waves are selling. So if I looked at this again, I would skip this, but I decided, I believe, to take this trade because of the location. I liked the location of it on the bigger picture. If you look here, I can show you on a bigger chart. Wait, hold on. 1044. 1044. Okay, so it's this. So see how the spike overnight at 10,840, I said if we test below that and bounce, it might be a good location to get long. Well, that's what I was thinking here. And so the location was right? At 10,840. We were just a little too high. We hadn't quite reached it yet. It was down here. So I'm getting a little ahead of it, right? By taking this trade. And the other thing I could have noticed is we were inside of single prints, this green, which often gives more noise, right? Plus, something I did not see, did we get a orthodox close below? Here is, oh wait, it's on this time frame. Where's the dominant buyer? It's this one. No orthodox close below. So I think it's okay. It's just sometimes it's going to stop, right? Okay, and then would you technically take that too? Is the other question is like if you got stopped, would you have to take this one? Well, the problem now is, I believe, have we gotten a close below the dominant wave here? Oh, we don't even have a dominant wave because of the 2-bar wave. So yeah, it's a little bit fishy here, of like, why isn't this bouncing and why is there so much selling still, right? But now we've got at least we've got some divergence. That's a good sign. See that the divergence continues on all these indicators. So I mean, if you're okay trading in the middle of the single prints, you can take it. The location is just not quite right. We want 10-840. So that was the mistake, is I just didn't give it enough time to develop. Now it comes right back into the oh wait, I don't think I had this. So it's still in the middle of the single prints here, right? And we still have not gotten a 15-tick aggressive wave, dominant wave. So I'd wait if generally, right? Now once that changes. Oh wait, did we get an aggressive wave here? Hold on a sec. Let me think about this. Yeah, so we got an aggressive. This is okay. We talked about this. So the aggressive wave on the higher time frame is going to be have more value than the aggressive wave on the smaller time frame. But what we need to do is make sure that we are rejecting anything lower than this, which we do. It would just have taken you multiple tries to be able to catch this low. And so if you're not willing to take it multiple tries, don't even take it the first time. Just wait for them to come back after confirming. Because see, we don't have a supernova, right? We have not closed above an apex. So really, you can just keep waiting, and that's okay if you want. Otherwise, there is this entry, which is the what Simon calls the Texas two-step, where we get, it's like a left shoulder, a head, and then it comes up, it makes one bar down underneath this left shoulder, and then the very next bar is up. And especially when this has some aggression like this, these aggressive signs, and you've had a 15-tick aggressive wave like this, it's a pretty good trade. As long as you've got a significant low down here for the head, and we definitely do. The location's not perfect, but it's good, you know. Am I right about that 10-840 being the right place? I think I am. Yeah. Okay. So yeah, the location's not perfect, right? But it's good. Now look what happens here. We close above this apex, right? What does that mean? If we get another setup, we should probably hold it longer than just a couple points. So let's see if we can get it to set up again. There. This is now a trap back into this, right? Where's our aggressive buyers? Well, on the smaller time frame, they're up here. And I got a little confused about this because my thinking was, hey, all my aggressive buyers are here. We're clearly below them. The thing is that the higher time frame is more important. It trumps the lower time frame, right? And so here, you could say that all of the buyers are here. And so all I need to do, since I've gotten the supernova right here, all I need to do is make sure that this low gets rejected. So once the supernova comes in, you can get underneath these aggressive waves and still be okay, as long as you have the bullish supernova has set up on the 24 tick, right? So then you do get the supernova, you get 50 points, I think that is. You get in here, oops, at 67, let's say, you could have gotten 07, 40 points, right? Comes right back up to the volume point of control of Friday and rejects, okay? Where does it go? 10-8-40. That's a pretty good trade, right? Now look what happened on the smaller time frame. This is kind of interesting. On the smaller time frame, we had an aggressive wave up, right? Again, it's a little bit confusing. You could put a bar here and you could say, did we develop volume below this? Well, the only bar we got below it was purple, and it was immediately followed by a green. So that's basically a rejection, okay? In my book, that's basically a rejection. Now, if you weren't confident enough to take that trade at 10-8-51, you might want to wait for this one to trigger, which happens here. And so that technically is good enough, and it works, right? If you didn't want to be aggressive and take that, no problem. Wait for the head and shoulders. Where's the head and shoulders? Well, you have to find the significant spot to the left, which is here. Look to the right, get under it with at least one tick, and then close back inside of it. So it's right there. So that's also a long. Okay. Oh, was there no aggression? Hold on. Doesn't work. The aggression's here. It rejected. I think it just fails. It just straight up fails. That's cool. Oh, does this one work? It took 2 tries. Okay, that happens. Sometimes you just need to wait for the next trap, right? That's fine. So you did not get an aggressive... Wait, did you? No. Just trying to make sure I'm not missing anything here. Yeah, so you have not yet gotten an aggressive wave on the 24 tick. Or the 15 tick. So, but you did back here. See that? It's just been a while. It's been since like 11:24 that you've gotten this aggressive wave. So as long as this area here continues to act as general support, which it is, see that? It's cool. You can keep taking it. This is also left shoulder, head, right shoulder. See it? Under this one. That's a proper head and shoulders. This one was a little bit of a stretch because you're going beyond to the left. I don't know if that's even such a good idea, actually, now that I think about it. You've got another... I might not be able to use that. I think since I've got an apex here, I got to use this one. And a lower. Since this is like low, lower, low, I think I need this one. So that's probably the answer, is wait for this. Okay. The location's good, right? And that goes. So that one goes like 100 points. Okay. That's a good point. I was done for the day. I did not get 100 points on that, by the way. I got a piece of it, but not 100 points. And I was done for the day. Okay, but let's say you didn't get it, right? Let's say you missed it. Did you have another opportunity? Well, you can look on the 14 tick. The 15 tick, I mean. And first of all, if you knew you were bullish, you could buy this divergence bar star and get in early. There's another one here for our scalp, right? And then we'd be looking down here for an entry. You just got the trap back in. So let's see if we got another opportunity here. So this divergent bar star is pretty far away from support. That's not really where you want to see it. Additionally, notice we can't get above... Oh, that's a 2 bar. We can't get above these sellers. So that could be a problem. It's not necessarily bearish, but it could be a problem. The good news is on the bigger time frame, which trumps the smaller time frame, we've gotten above a seller. So actually, it's bullish. We just want to be bullish down here, right? So bullish, wait for a pullback. Okay, now they didn't give you much of one if that's it. They trapped underneath the divergent bar star and came back with another divergent bar. Tricky. That would have been pretty tough to take if that's it. I would have missed that. Okay, there we go. So trap back in. So this is just your typical supernova. So put in a low, put in an apex to the upside, break and close above that apex. Now any trap back in is tradable. That's as good of a trade as it gets, in my opinion. Yeah, that's good. So bullish, right? All the way up here, you get your 30 points plus. Clearly the buyers are now taking over, right? So we stay bullish. No star there, so we wait. Bullish on both time frames. Okay. Divergent bar got trapped back in. This is a trap back in here. It's a 2-bar combo, purple bar, green bar, or purple bar diamond. As long as you are bullish in supernova, I can take 2-bar combos. So that's bullish. This one just barely gave you 10 points and then rejected. Interestingly, this was actually a short on this star. I'm not showing all the shorts, but if you want to, you can measure here and see that all the volume on the way up was up here. And so it's not short until they develop volume below it and then reject it with a star. So that's actually an okay scalp to the downside. Okay. I took that trade too, by the way. I did not get it. I took it off at 10, 8, 7, and 8. 7, 9, I think, because of the voodoo range level. I assumed that because there's supernova up, that it's just a scalp. And so instead of staying short, I went long here. So see how that works? Hopefully you see how that works. Yeah. So again, the bigger picture, I don't want to confuse people. The bigger picture is bullish, and that's what matters more than anything, right? But there are opportunities within that bigger picture sometimes to take scalps to the opposite direction. Many people have a hard time with that. And so I don't always point all those out, but that one I happen to take, so I wanted to show you. But technically you could just wait for this trap back in to happen right here and just buy that. And you get 100 points, right? And you're having a great day. So maybe that's where I was done, now that I think about it. Maybe I didn't catch that one. No, I think I did. God, I don't remember if I was done or not on this one. I know I took the short, but I don't remember if I got this or not. If I did, I don't think I held it for as long as I should have. Anyway, on the smaller time frame, 2-bar combo, and then big impulse wave, right? So don't short. That's the most important thing. Don't fight those, generally. And then here's another 2-bar combo, right? We're clearly in supernova. Every time we make a significant low, we're closing above the previous high, making higher highs, right? So you can take the more aggressive trades if you want, but they're not always going to work. This one only goes 10 points. That's fine. Do we have all the volume at the high? No. All the volume's at the low. Nothing to do here. Don't short it, in my opinion. It might go lower, but don't. Here, that's your trap back in. That's your better trade. See that? That's your better trade. You got the apex, traded below it, and then in 1 bar came back into its range and closed bullish. We've gotten a big buyer, right, on both time frames, and we've clearly not gotten volume developed below that. So that is bullish. And so you get another push. Now, normally you'd say, well, shouldn't I be holding that for 30 points? The problem is that resistance is right here, right? So yeah, you can, but realize that you're going to have trouble breaking some of these at times, right? So you can just keep holding if you want. This is a trap back, head and shoulders. The problem is it's not at support. So it's risky. And it might be even more risky if you don't have aggressive buyers, but here you do. So I think it's okay. Yeah, it's fine. You gotta make sure you leave at least a point underneath this. Oops. I think you were okay. Let me see. Did this work? So your stop would be 1 point below 28, so it'd be 27. This low, 27.50. Yeah, you're good. By two ticks, you're okay. Once you know what's bullish, all the blue and the stars together is really good in general, especially if there's a blue dot or blue diamond in there. I think it's a dot. Yeah, blue dot. That's good too. The divergence with the stars, great on either time frame. So, okay, so that one goes. Where does it go to? It goes to this liquidity, sucks it up, and rejects. Now, here's where another short might have showed up. Nope. Volume at the low. Don't mess with it. Okay. Not a trap back in, not a 2-bar combo, right? And not support, so it can't really do a head and shoulders. But we've clearly had a buyer that is bullish with an impulse move to the high. They did retrace almost this entire thing, right? But they did not develop volume below it. So if you got a setup here, you could get in. Let's see if we do. right there. So you got one triangle. This is a new setup, but one triangle with a pink bar, and then a second triangle with a pink bar. You could technically take that. Your stop on that goes under here, by the way, not under the triangle, under the bar before it. That's a new trade. It works on both time frames. Otherwise, you can do triangle with the star or triangle with the pink bar that then gets retraced, and then in that same range, you get another pink bar. That range then becomes buyable, as long as it's bullish. Right? Now this one, and again, your stop needs to go back here below the apex. Right? So you could get in, once you saw this pink bar, you could get in on this pullback and put your stop back here. That's an advanced way to get into that. Yeah, I'm not really going to do any head and shoulder here because it's not really support. It's just like a consolidation range. No trap there. Let me just get rid of this, make sure I can see it right. No trap there, right? No trap. Interestingly, we got a big seller here, the sell wave, dominant sell wave. See that? Dominant sell wave. And the dominant sell wave actually came off the top. So if you take this same concept in the opposite direction, right, you can say, well, as long as I don't get above this and develop volume above it, it's probably sellable up there, but I need to get location right. You don't want to take pink bar, orange bar down here, it'll get crushed. But if you, and pink bar star down here, probably not going to work. But if you can get it up here, it might. Now this one does not give you pink bar star, but this one does. Pink bar star, pink bar orange bar. If you thought it was bearish, you could technically take that there as a lower high. That's not wrong. It's just a little aggressive. But if on the bigger time frame, if you thought this was, remember we talked about this, how on the bigger time frame we're in this pink area at the close, right at the top of this pink area. We know that it makes sense to consolidate in here. So as long as you're at the top of that that shaded area, that purple shaded area with the pink border, it's you can technically sell it, right? You just realize that like this could get swept behind, and then you'd probably have to take it again. I don't remember what happens. Okay, yeah, so it just rejects. Cool. Now let's think about whether or not you want to be. This is where it gets confusing. If you go back and forth between the two, you'd have to ask yourself, well, do I want to be bullish or do I want to be bearish? Well, the number one thing to think about is where are all of the buyers and where are all the sellers? So just look at this. You can see all of the aggressive buyers here. Yeah, are down here on this big impulse wave here, right? So as long as we're not developing volume down here, on a bigger picture, it's probably more bullish than bearish on like a median time frame, right? But we really want our buys to show up down here. Yes, we did get supernova, right? So if you can get some traps here, they're going to work often for 30 points, right? But eventually that might stop working because they're going to come back, they're going to trap you, right? If you get sellers, sorry, if you get buyers trapped, like an aggressive wave, I mean, gets overtaken like this, right? What that suggests is that buyers are probably trapped up here. See this line right here? That had a lot of volume, and most likely that's going to be really hard to break. And if we do break it, it might immediately reject and be a good place to sell. So the basic idea is whether or not you're bullish or bearish, your best choice is either buy right away and join the trend, or just don't do anything in here and be a buyer down here when there's aggression and a seller up here when there's aggression. That's the easiest way to trade this price action in the middle of the range like this, right? Because big picture, we know this could be the low, right? This might be a spring. And so it could just keep going. But also on big picture, you might think, well, but look at that big sell wave. Isn't that bearish? Yes, but I don't want to be selling aggressively down here, right? I would want to be selling on retraces. So you don't want, the important part is where do you buy and where do you sell? And it's a lot easier if you only look in one direction. But if you want to look in both directions, you have to think about location. And basically, you just want to avoid trading inside of this Friday's point of control in general, and instead sell up here and then buy at the bottom of it. So we haven't gotten down there yet, but it would make sense to me to sell this or this or this. I think that's okay, as long as you've gotten aggressive sellers, right? And it would be better if this bar was pink, but this one, pink bar, orange bar, or pink bar diamond, or pink bar with the little yellow box on it, or pink bar star, as long as you've gotten the aggressive seller there, it's all good. So that's the review. I don't want this to go too much longer, honestly. If people have questions, let me know. Otherwise, I will. We'll have to come back to doing some of the filtering later, because there was a lot of setups today. Like I said, I had a pretty strong day, and there were lots of opportunities. So I'm hoping that continues. It was just a big, nice range day, or a big, not a ranging day, but a wide range of trading. And what was nice is, even though it started in one direction and I wasn't able to participate early on, there were plenty of opportunities. As long as you were patient, even though I missed this short, right, because it was on econ and at the open, there were plenty of opportunities to. First of all, I caught a short in here, but there were plenty of opportunities to buy. Whoops, you can't see that. To buy down here and make a lot of money. So, good day. Yeah, remember, if you want to get a hold of me, you guys, contact me at Red Ben Trader on Twitter.